Now.
Thank you all for coming along to my seminar today on debt recovery. These are tips and traps for protecting cash flow in your business. I wanted to start by talking a little bit about what debts are and why customers don't pay. When I talk about debts, for the purposes of today, I'm really talking about your really straightforward claims where you've done work for somebody or you've sold somebody something, you've sent them an invoice, and for whatever reason, they haven't paid you. So these aren't really the situations where perhaps there's a question about what should or shouldn't have been paid. These are the more straightforward matters where the customer simply hasn't paid and there's been no real explanation. There are a number of reasons why some customers don't pay you for the work that you've done. Sometimes it's because there's a dispute. It might be a genuine dispute. It might be a trivial or nonsensical dispute. So the type where someone says that they owe $10,000, but they're disputing the 48 cents. Or it might be something that's been concocted, something they've made up after the event as a bit of an explanation to try to put you off. Some of the main reasons we hear for people not paying is because they've got cash flow issues. Cash flow is always a really difficult one because everybody's trying to manage their cash flow, but at the same time, everyone has some cash coming in, and if they're not paying you, it may not be that they're really in dire straits. It may simply be that they've got other creditors that they're giving priority to over and above the money that they owe to you. Some businesses just work on having intentional delays. They pay everyone at 60 or 90 days, regardless of who they are. And some have temporary cash flow difficulties. So your classic example there is perhaps a builder who can't pay any of their subcontractors until they've been paid by their own customers. The reality is that some people out there that we come across from time to time are just professional debtors. These are people who happily go through life racking up all sorts of invoices, getting all sorts of services and goods, but never paying, and then putting things off and trying to save some money or negotiate cheaper rates after the event as part of how they live their lives. And then the final category is people who are genuinely insolvent. So the people that genuinely don't have the money and perhaps legitimately can't come up with the money that they should have come up with earlier to pay you. The reason I like to go through that sort of summary of why some customers don't pay to begin with is because it really flavors what our aims are when we're talking about debt recovery. So when it comes to people who've raised disputes, the purpose of debt recovery is to provide a mechanism to resolve those disputes. It might be through having legal people involved who help to clarify the issues. It might ultimately be by going off to court and having a judge decide. But it's a means of resolving those disputes, whether they're legitimate or concocted disputes. If your customer's having trouble with cash flow, then debt recovery offers you a means of compelling payment. It increases the pressure on the debtor to come up with payment for you, as opposed to any other people that they owe money to. It creates consequences for people who don't pay. And in some circumstances, it even goes so far as taking responsibility for making the payment outside of the debtor's hands by, for example, having a bankruptcy trustee appointed or having a sheriff go and seize property and sell it to pay your debt. A couple of the other aims that we have are a bit more left field, but they're certainly important for some of my clients. In some cases, it's simply a matter of exhausting your recovery prospects. You know that you're owed this money, you know you've got it sitting there on the balance sheet, but you don't want to just write it off until you've taken the steps that are available to you to try to call it in. And finally, sometimes it's simply a matter of sending messages to other customers. The reality of the worlds that we live in now is that we're all connected and people talk. This is particularly the case when it comes to certain industries or certain individuals. Some love to tell somebody if they've gotten away with not paying you. And if that's going to be the case, then you don't want that reputation to be out there. And sometimes sending a message to one customer by calling in a debt or even pursuing it through to a bankruptcy can pay dividends in terms of the impact it has on the rest of your customer base. So what is debt collection? It really comes down to three different stages. Stage one is the internal recovery action, and I'm going to spend a bit of time on that today because That's where most collection work happens. These are the things that you can do yourself without having to pay a lawyer, without having to pay a debt collector, to make sure that you're getting paid most of the time. Stage 2 is issuing legal proceedings, and I've split that up into a couple of the standard processes that we follow: sending a letter of demand, issuing court proceedings, and finally obtaining a judgment. And then number 3 is enforcing a judgment. So that's right at the end of the day, when you still haven't been paid despite having taken all of this action, and you need to perhaps have the sheriff go and seize some property or obtain an order that their employer start paying your debt, something like that. So when we talk about internal recovery action, the key to this, I think, is to remember that a lot of it doesn't sound like recovery action, even though it is. Sending an invoice is simply a part of your standard business practice. It doesn't sound like it's anything fancy, but it's the first step in getting paid, as we all know. If you haven't sent the invoice, you're not going to get paid. The second thing to note is that it doesn't really matter too much what you do internally, as long as you're doing something. So you can send a reminder notice. It doesn't need to be 7 days overdue. It doesn't need to be 14 days overdue. The timeline that I've got on the side there is just a sample. But the key is that if your invoice has a due date on it and that due date goes past, you should be taking some gentle action to begin with. Now, obviously, to start with, this is your customer. You don't want to be too bullish. You're not going to threaten to sue them straight off the bat. But you need to be taking some action reasonably early on to get the ball rolling. From there, that action needs to escalate. So if they don't respond to the gentle reminder, your next step is an overdue notice. Perhaps it's a phone call, an email, a threat to refer matters to a lawyer's. So that process needs to escalate as you go along to ensure that A, the debtor knows that you've noticed they haven't paid, and B, they're aware that something else is going to happen if they don't meet the next due date. And then eventually you reach the point of having a lawyer do a letter of demand and look at court proceedings from there. I wanted to spend a few minutes talking about some of the things that you can and can't do internally, just to give you a bit of an overview of how that process works. So firstly, who you can contact. If you're dealing with a business debt, money that's owed by a business, you can contact really anybody, but the best people are the director or the business owner or the appropriate person or accounts person who's been handling account receivables. It's a different situation for a personal debt. If you've got a personal debt, you can only contact the debtor unless they've given you permission to speak to somebody else, so a representative. And you need to be aware of that privacy issue. You can't tell a third party about a debt that's owed by an individual. How can you contact them? I don't recommend face-to-face contact for debt recovery work. It's expensive, but also it comes with a risk of becoming intimidating or embarrassing and backfiring on you in terms of the debtor claiming that you've perhaps trespassed on their property or perhaps, verbally assaulted them or something like that. Everyone's connected these days. Everyone has mobiles and emails. There are plenty of better ways to contact people than face-to-face. When you're contacting someone by telephone, I tend to think that direct mobile numbers are preferred. If you don't have a direct mobile number for somebody, just be careful, and you're leaving a message, on a home phone or a business phone, just be a bit careful about what you're saying in that message. Be mindful of the privacy. You can certainly leave a message asking for someone to call you. You can't tell a third party that they have to call you about this debt, because otherwise I'm going to lawyers straight away, because that's giving that third party information that they're not entitled to. When contacting people by post, we always recommend that if it's contact to an individual, send it to their home address. The aim isn't to embarrass them by writing to their employment address and potentially having someone in the mailroom open up the letter. But the exception to that is that if you don't have their home address, or if they've moved house and they haven't updated you, then you're able to write to the personal address, to the work address. And we always recommend there that you simply mark the letter as private and confidential as a means of trying to mitigate against the embarrassment that might come from somebody else opening it at work. A similar issue with email. It's certainly okay to contact someone at the email address that they've given you, but if you've got someone who's got a joint email address, or if you've found their email address on LinkedIn or somewhere else online, just be a bit mindful of ensuring that it is just their address before you're giving up the personal information. There are a few, I guess, best practice timeframes around when you can and can't contact debtors. The purpose of these is to avoid an allegation that you're harassing or being overly aggressive in your debt collection practices. So for businesses, we restrict our phone calls and emails to business hours. For individuals, I've got the times there on the slide. It's really from 7:30 a.m. till 9 p.m. weekdays, 9 till 9 on weekends, and no contact on public holidays. In terms of how often you can call, the debt recovery guidelines place a limit of 3 contacts per week. That's contacts, so it includes emails, phone calls, text messages, whatever you might be doing, and a limit of 10 per month. Again, the purpose of that is that we shouldn't be badgering the debtor. It's simply a matter of letting them know that you're owed the money. And then one further point that I want to make, when you are talking to your debtors, you need to be careful that you don't engage in misleading or deceptive conduct, because doing that exposes you to a claim against you. So your collection action can backfire. There are a number of ways that might happen. You can't imply that you're going to take legal action unless you're genuinely going to. You can't claim amounts that aren't really recoverable. You can't imply that you're going to get a judgment or you're going to impact their credit record unless that's what you're actually able to do. So just be a bit mindful that you don't oversell the matter. All you need to say is, this amount hasn't been paid. It needs to be paid by this date. And one further note is you need to be careful that you're not going to say anything that could be construed as giving the debtor financial advice. So this means suggesting that they should take out a loan or a credit card or withdraw money from their super. This was one that was a big thing at the start of COVID, where there were reports of real estate agents running around telling poor tenants that they had to withdraw from their super to pay their rent. The issue with that is that it can be construed as giving financial advice, which you're not allowed to do unless you've got a financial services license. So that's the sort of thing that can backfire on you. And then one further point, just in relation to late fees and penalties, some of my clients do charge interest on unpaid debts. If you've got terms and conditions in place that allow you to do that, then that's great. You just need to be careful that what you're charging needs to be calculated based on what you've actually lost. There can't just be, you didn't pay me $1,000 by last Tuesday, so now you owe me a penalty of $15,000. What we recommend is the clients just use the penalty interest rate. That's the rate that's applied by the courts. It's 10%, so it's an awful lot better than you get on a mortgage these days. And it gives you some protection, I guess, against the loss that you suffer from late payments. So moving on from there, you've gone through that process, you've tried your phone calls and emails, and you've stayed within the rules, and the person still doesn't pay you. That's when it's time to come to someone like me. What we do to begin with on every debt matter that comes across our desk is we start with a simple letter of demand. So it's just a letter on our letterhead. It explains how much is owed and what it was for, and says that unless payments made within 10 days, we'll be commencing legal proceedings. Now, the important point there is we don't send that letter unless that's actually what we're going to do, because there's no purpose in making empty threats in debt recovery. So when you send that letter, be ready for stage 2, which is issuing legal proceedings. Ordinarily, for most claims, that'll mean bringing a complaint in the magistrate's court. It's a relatively straightforward document that explains how much is owed and what it's for. It costs between $1,200 and about $2,500, depending on how much the debt is worth, and most of those costs are recoverable from the debtor as part of the court process. It's served on the debtor, and then within 21 days, they need to either pay or file a defence. If they don't take either action, you can obtain a judgment against them. If they do, then it goes through a range of court processes designed for before it reaches a final trial where a judge will decide how much is owed. So you get your judgment either through default or after a final trial, and these are some of the options that you've got to enforce it. So we've got a summons for oral examination that involves having a debtor compelled to appear before the court and give information about their financial position. There's a sheriff's warrant that involves the sheriff going around and seizing a motor vehicle or other property to sell to pay your debt. An attachment of debts is where somebody else owes money to the debtor and you get an order that they pay that money directly to you. An attachment of earnings is similar. It's where your debtor is employed and you get an order that they pay the money instead of to the employee. Part of it comes directly to you to satisfy the debt. And then finally, bankruptcy and winding up is having a bankruptcy trustee or a company liquidator appointed to manage the debtor's affairs. So that's a very quick overview of what you can and can't do and what lawyers do in debt recovery. Just a couple of final points that I wanted to make is that it's always worth considering those issues before you decide who to do work for. If you know that a certain customer looks a bit dodgy or perhaps isn't going to have assets that you can enforce against down the track, make a bit of an assessment about whether you really want to be doing work for them in credit in the first place or whether you want to seek some securities from them. And establish a system. Make sure that you've got some sort of process in place to manage these invoices, ensure that they're followed up, ensure that the debtor knows what the consequence will be if they don't respond to your follow-up emails. That concludes my seminar today. I hope that you found that helpful and informative. And as always, I'm happy to answer any questions that you might want to send my way.